There comes a time when we must address reality. We surely can live in fantasy land on occasion. People do it every day by tuning into their televisions. They can escape reality for a brief period. However, we must come back down to earth or face the consequences. The future might be a bunch of people living under a virtual reality headset, but for those who want some level of control in their lives, we should probably be paying attention. You came here for the truth, so let me unveil that for you. Today we are going to look at what's been happening recently. I'll give you an update on what Jeffrey Gundlach's recent webcast had to say, give you the breakdown, the charts, everything that was, as far as I'm concerned, important. And we could look at several indicators. I also want to talk about real estate. I've got a lot to cover, and usually you've seen it. I talk too long, but I'll try my best to keep this concise. Let's go. Gundlach does expect the stock market to decline. Quote, I would think it would be much more than 10 or 15%. I don't know if it would be more than 80%. So we don't know exactly what's going to happen here. And I think it needs to be taken into context entirely. But essentially, he does believe that the market is overvalued. So a correction here is overdue. And if you look at the stats I bring to you today, it puts that into perspective. I don't necessarily agree with anybody and what they say. I do not share my opinions here. I get a lot of hate, hundreds of comments yesterday telling me off. Hundreds of comments. That was unbelievable. Usually it's, 50 or less per day, but I actually got hundreds of them. If I bring you information, I don't necessarily agree with what I'm reading. If I'm talking about Jerome Powell and his actions, I don't necessarily agree with what Jerome Powell is saying, but I bring it to you because that's the information that I think you should know. What you do with that information, it's up to you. Now, you have a bunch of sick psychopaths out there that talk, they go to channels, I guess, and they just spew out hateful comments. I think that's crazy to me. But anyway, let's get on with it. Right at the end of the podcast, he said something very important. And if you saw the title, you know that I'm hinting towards this right here. Ends the webcast saying that the farmland is the cheapest asset in the world. And you look around, the prices are depressed. You look at this over a long period of time. You compare, let's say, technology to agriculture. We can do without Netflix and Facebook and all of these things. We can't do without food. Okay, and you just see the valuation, the difference is just shocking. Now, agriculture has risen significantly, but if you were to zoom out and look at where it has been, it's just down significantly. Now, that is changing, certainly, but I just think that it's important to look at farmland specifically. Look at what Mr. Gates is doing, and you could see he's buying it all up. Now, maybe he knows something that we don't. Maybe he wants some control. Not allowed to get into the details of that, of course, but I think you should research it if you don't know already. I did bring it up on a previous video. I do think it is worth taking a look at. I'll say that. I'm going to go through several charts, and then I'm going to break that up by showing you what's happening with real estate. Then we'll go back into some charts. I don't want anybody to fall asleep more than they already do. Okay, so right here you can see the sector share of GDP, employment, S&P 500. Okay, so in this column here, we are looking at the third quarter of 2020 nominal GDP. Right here, you could see the November 2020 employment, and then right here we get December 2020 S&P 500. And essentially what I note from this is that when you compare what the S&P makeup is to, and you compare that to the actual employment, look at this. Technology, 2%. Compare that with the S&P 500, it's 38%. 38%. Big difference. But look at healthcare, for instance. 14% here, 13% here. And you can go through that. It just gives you an idea of what's happening in the economy side, and then look at what's going on with the stock market. Very different. This is what I say when we have speculation. Speculation, big change. Now you pull that back 40 years. Things were not so out of whack. But people would say, oh, well, this is different. This time is that. Look, there's always new technologies If you go back 40 years, there were certain things that were so futuristic. Nobody had predicted that they could exist 20 years, 30 years before that. There's always something new. What we have today is going to seem like a joke 30, 40 years from now. But people are just going to keep saying the same thing. Whatever makes them feel good, that's what they believe. Look, I'm just bringing you the data. Stimulus after the global financial crisis versus what we saw right now, I mean, it is not even close. Total $1.8 trillion versus $6.1 trillion. It's ridiculous, but of course, this is what has to happen because they want to destroy the currency. And the more money that they're able to put out there, that means more control that they have. This is what the government is designed for. They want more and more control over the few. And I think it works if you look at the breakdown of where the money actually goes. You know, you see these big numbers. Oh, it's $1.9 trillion. That's fantastic. You're going to have that divvied out in the paychecks. So the checks are going out to people and it's going to help assistance, healthcare. Oh, wow, fantastic. But you actually look, you take it deeper and deeper and you try to get as deep as you can and you realize, wait a minute, all of the things that the average person have, they're going to be left with the exact same thing at the end of all of this. You get a couple crumbs if you're lucky. But the systems, the overlords that are all in control of everything, they got more funding. That's the way this works. It's always being used against the people. I brought this up. I wanted to show it to you again because I believe it is very important. And you could see in the webcast, he brought it up here. Just make a note of it. The percentage of personal income made up by government transfer assistance payments. All right. Right now, today, 27%. Think about how out of whack that is. All of the income right now in the US, 27% of that is generated from the government. That is, to me, shocking. Now, there are spikes. Hey, happens. It happens, right? But you see, over time, more and more of that personal income is made up from the government. Go back to, at the beginning of this chart here, 1960. It is 5.87. It peaked out when we had, in 2020 there at 31. Okay, now it's come down to 27, but it's still nowhere, absolutely nowhere. Even if you go down where it was in 2019, it's still triple of where it was decades ago. You need a real economy. Stimulus and quantitative easing is completely unsustainable. It's like holding a stick of dynamite. As long as the wick is going, the wick is lit, it's coming down, you don't need to worry. Nothing to worry about. Well, I mean, things could happen, of course, but the analogy here, you can hold on to that dynamite and everything's all good, but eventually that wick runs out and you're left in pieces. US budget deficit watch. All right. Right now, 16%. This is showing you the US Treasury federal budget deficit or surplus as a percentage of the nominal GDP. 16%. Never seen anything like this before. This chart shows you all the way back from the 70s, and it is shocking to say the least how bad things have become, and there is no plan on turning it around. NASDAQ 100 relative to the S&P 500. It had exceeded what we saw during the dot-com boom and bust. And then you've got the US core CPI year over year at 1.4%. They're having trouble, everybody. They're having trouble creating inflation. So they're going to do their best to create some inflation today. I keep seeing the comments about, oh, well, food is included in the CPI. Shut your mouth. But you got to understand what metrics they are actually using and realize they tell you one thing and they use a different metric on the other side. All right? We have to be very clear about what they tell us and then what they're actually looking at. It's so important. Okay, we'll go back to the charts in just a second, but let's look at these. BP to tell 25,000 office staff to work from home 2 days a week. Now, that's a lot of people that are suddenly not driving their cars, less gasoline required. They are not going out for lunch, let's say. They're not using the same shops that are around there. Maybe they were going in on their lunch break and they're buying a little thing, maybe a shirt, because they're at the office more often. They need more clothing. They need new shoes. They need, anything, whatever that might be. They're not doing that. Maybe they're not going to the gym anymore because now they work out at home. They are using facilities in their own house. They're not buying what they used to previously. They're doing everything in their home, at least more often. That puts additional pressure on the businesses that are in the core areas. And for the most part, I am seeing this as a trend. And it doesn't, you look anywhere. It doesn't have to be the United States. You pretty much look everywhere, major cities around the world, the same thing is happening. All right, back to the chart GPS, disposition of U.S. personal income, January 21. You can see the percentage growth on the first one here is the personal income. Then we have wages and salaries, and then we have government transfer payments. The only point I'm trying to make right here is that the government is providing the vast majority of all that growth that's coming in today. I showed you that chart earlier on, and of course, you can see what's been happening, but the growth is coming from the government. No, not people. People aren't making more money than they were before. In fact, a lot of people that are employed today are getting paid less than what they were previously. Why? Because their employer said, I'll take you back on. I just can't pay you what I was paying you before. And the people say, well, I need a job, so sure, I'll take that. Did they necessarily get their wages back up to where it was before? Some cases, yes. Some cases, no. Stimulus payments widely reported being used for investing in stocks. Proportion of respondents invested in the stock market using government stimulus checks. You can just see it broken down by age. I think it's just crazy overall to see how bad things are today. Take a look at the option activity by security type, average daily volume. Options volume is surging. This is basically from the beginning of 2019 up until today, and it's just getting crazy right now. From 2020 into 2021, it's been getting crazy. People don't know what the heck they're doing, but hey, why not, right? Net percentage, this is coming from the Fund Manager Survey at Bank of America, say that they are overweight equities. This continues to grow. You look at the lighter colored bars, and that's the actual Fund Manager Survey net percentage, say they're overweight on global equities, and then the blue line being global equities themselves. I just showed you this because it just gives you an idea of the institutional investor, not necessarily the retail investor, because if you want to check out what they have to say, just go to the Reddit boards and you get a pretty good idea of what people are interested in. Net percentage say that they are overweight on cash. Nobody. Can we say that? Because that's the case right now today. And you look at the all-time high in investors taking higher than normal risk, and that is truly right now an excessive level. Compared to normal, where the quote unquote normal levels are already excessive, today we've gone far beyond that. That's all for this video. If you found it informative, hit that thumbs up button. If you hate me, if you hate my face and you made it this far into the video, I want to congratulate you, and I want you to support me as well by giving me a thumbs down. If you want to learn about e-commerce, you can do so at any of the courses out there. They're $1,000, $2,000 available to anybody to check out, or you can find mine. It's available for free at the AmazonGPS.com. If you want to learn about the financial system, you could do so at the link in the description, bring you over to the 2 books that I've got, that I wrote, that break down everything so simply and easily. Anybody can understand it, but there's so much detail at the same time. So check them out at the link if you're interested. Have you seen this video? This is about Michael Burry and what he had to say. And I think it's important just to see that final warning message that he gave out, and we'll see how it all plays out.